Japanese candlestick patterns. Candlestick shadow. The line that appears above and below the body is referred as the shadow, wick or the tail. It's almost as important as the body. It shows us the range for that period. It adds to the body's interpretation of the market's psychology. It represents the high and low for that period. The tail on the top shows us the high for that period. The tail on the bottom shows us the low for that period. Candlestick shadow. Candlestick shadow. A long shadow can show support or resistance. Possible resistance. Possible support. A long shadow can show support or resistance, depending on where it is in the candle and where it's located on the charts. Basic candlestick patterns. Marubozo. Short day. Long day. Spinning top. Doji paper umbrella. Marubozo. Shows large range between the opening and closing price with immediate strength or weakness. Usually the second bar in a reversal or continuation pattern. Has no shadows. Short days shows small range between the opening and closing price. Small shadows. Multiple short days can indicate consolidation. Long days shows large range between the opening and closing price. Shows strength and weakness. Spinning tops. The shadows are longer than the body, shows indecision. Also seen in consolidation. Doji. The open and close must be equal or very close. Gravestone. Dragonfly. Long-legged. For price. The open and close must be equal or very close. Gravestone is bearish when at the top of a short-term rally. Dragonfly is bullish when at the bottom of a short-term break. Long-legged shows indecision. Usually seen in illiquid markets, no trades may have took place. Gravestones and dragonflies could have small tails on one end. Gravestone Doji sell below. Gravestones must be seen at the top of a short-term uptrend. Buying comes in right from the opening, showing continued strength followed by a sell-off later in the day, closing near or on the lows. There could be a small wick or very small body. This must be followed by a confirmation bar to confirm trade. Must sell below the lows. Dragonfly Doji buy above. Dragonflies must be seen at the bottom of a short-term downtrend. Selling comes in right from the opening, showing continued weakness followed by a rally later in the day, closing near or on the highs. There could be a small wick or very small body. Paper umbrella. Color does not matter. Umbrellas can have tails and color doesn't matter. Color does not matter. Location on the charts is what's important. They can have small shadows. Candlestick reversal patterns. Hammer. Hanging man. Inverted hammer. Shooting star. Engulfing. Harami. Harami cross. Doji star. Evening star. Morning star. Hammer buy above. Hammers must be seen at the bottom of a downtrend. Aggressive selling right from the open with a recovery. Throughout the day, closing near the highs creates the handle. Color of the body does not matter. Must wait for the next candle to confirm before putting on the trade. Hanging man. Sell below. The hanging man must be seen at the top of an uptrend. Aggressive buying right from the open with a sell-off. Throughout the day, closing near the highs creates the pattern. Color of the body does not matter. Must wait for the next candle to confirm before putting on the trade. Inverted hammer buy above. Confirmations must be above the high of the hammer's range. Buy above. Inverted hammers must be seen at the bottom of a downtrend. Buying comes in right from the opening with a sell-off later in the day. Color of the body does not matter. Shooting star sell below. Shooting stars must be seen at the top of an uptrend. Buying comes in right from the opening, showing continued strength followed by a sell-off later in the day, closing near the lows creating the small body. Color of the body does not matter. Must wait for the next candle to confirm before putting on the trade. Confirmations must be above the high of the hammer's range, engulfing buy above, sell below. In an uptrend, the open should be higher than previous bar's high, and in a downtrend the open should be lower than the previous bar's low, showing a continuation of the trend. The close-in should then totally engulf the previous bar's high or low to enter the trade. Harami, sell below, buy above. The current candle's range should be completely engulfed by the previous candle's body. The colors of the bodies should be reversed for a reversal. The size of the second candle affects the magnitude of the reversal. Must wait for the next candle to confirm before putting on the trade. Harami, cross, sell below, buy above. The current candle's range should be completely engulfed by the previous candle's body. The size of the second candle affects the magnitude of the reversal. Must wait for the next candle to confirm before putting on the trade. Doji star, buy above, sell below. Use good overbought/oversold indicators such as RSI and stochastic. Shows indecision. Use overbought/oversold technical indicators when at tops or bottoms of a move. Needs a confirmation candle. Morning/evening doji star. Buy above. Sell below. Use good overbought/oversold indicators such as RSI and stochastic. The star must gap lower at the bottom of a downtrend or gap higher at the top of an uptrend. Needs a confirmation candle. Morning/evening star, buy above, sell below. The morning star is at the bottom of the move and the evening star is at the top. The star must gap lower at the bottom of a downtrend or gap higher at the top of an uptrend. Needs a confirmation candle. Abandoned baby, buy above, sell below. Gap. Gap. Sell below. Very powerful move. Must have a gap in the direction of the trend followed by a star or doji. This must be followed by another gap in the opposite direction. Piercing line, buy above, bullish reversal. Continuation of a bearish trend seen by lower open, making new lows, following a long red candle. Closes the day higher than 50% of the previous body.